Aloha, everybody. I'm thrilled to be back here again at the Hawaii Cannabis Expo. Fantastic show. Cannabis business event calendar that tracks all these B2B events that are going on all around the world, including the Hawaii Cannabis Expo right here this weekend in Honolulu. I am also the executive director and president of Los Angeles NORML. And through that organization, I've dedicated myself to advancing cannabis legalization and justice, including a donation program that we run in California, where we've donated over $5 million worth of medical cannabis throughout Southern California, mostly to veterans and to other patients in need. So very proud about that. I also serve as the chair of financial services for the Cannabis Chamber of Commerce. And my career spans many companies with entrepreneurial experience. I've worked with key industry stakeholders, hosting high-profile networking events, as well as advising on compliant banking solutions and navigating the legal complexities of cannabis finance. I've cultivated strong partnerships in both the cannabis and financial services, fostering growth and collaboration to expand access to financial services for cannabis-related businesses. And also, I'm an old school Kama'aina. I grew up in Hilo, Hawaii, on the Big Island in the 70s and 80s, and then and I think that really truly shaped a lot of who I am today. And then in the 90s, I was fortunate enough to move to Amsterdam for a little while and really have a cannabis awakening over there in Amsterdam, for sure. All right, so we're here today to talk about banking, payments, compliance, and all these things in the cannabis industry as it relates to cannabis. So just a little backstory here. As most of us here know, the cannabis plant has been used by humans for thousands of years, and studies have shown it's medicinal, industrial, and has other benefits. However, cannabis in the United States remains federally illegal, despite multiple states legalizing cannabis within their state. This dichotomy of cannabis being federally illegal and yet legal in certain states creates this risk-based opportunity for banks and credit unions to serve the industry. The overarching federal laws do not allow banks and credit unions to work with entities that derive income from an illegal drug. However, there's enough guidance from different federal agencies that provide a patchwork of material to support banks and credit unions making their own risk-based decisions to serve the cannabis industry. And actually, as of 2025, there are over 825 banks and credit unions that have reported relationships with state-licensed cannabis businesses. So I will say that today it is not a problem to access cannabis banking. But this is going through a little bit of the history on this. So I want to talk a little bit about some of the legalization history here. So over the last 100 years in the U.S., cannabis has gone from being criminally illegal to now undergoing forms of legalization through a variety of methods and across different states. So while we're going to focus on cannabis banking and payments today, we're not going to cover the benefits and the science of the actual plant, because I think most of you know this, and this is really a given here. However, it's important to understand some high-level industry legalization milestones. And so I'm going to cover a few brief things, starting with the Marijuana Tax Act of 1937, all the way to the current fragmented state-by-state regulatory framework. So in 1937, the Marijuana Tax Act was passed. And in 1970, the Controlled Substances Act was passed. And then in 2014, we had the Rohrabacher-Farr Amendment. 2018 came the Farm Bill. 2022, Medical Marijuana and Cannabidiol Research Expansion Act. So I'm going to go into a few of these in detail. The Marijuana Tax Act of 1937 was the first national regulation on cannabis and created a way for the federal government to regulate cannabis through heavy taxation. It imposed a tax on every person who imports, manufactures, produces, compounds, sells, deals in, dispenses, prescribes, administers, or gives away marijuana. Additionally, a person had to register with authorities in order to pay this tax, but you couldn't do it, so nobody got the tax. Nobody got the stamp. In 1969, Leary versus the United States decision in the U.S. Supreme Court upheld the Marijuana Tax Act to be unconstitutional, since it violated the Fifth Amendment right against self-incrimination. And in this case, the petitioner was found in possession of marijuana in Texas, and it was a crime in Texas where he was arrested, and also in New York, where the petitioner asserted to transfer, where the transfer occurred. So if the petitioner had registered the sale and transportation of marijuana with the IRS as required by the Marijuana Act of 1937, he would have incriminated himself. So in response to this, Congress passed the Controlled Substances Act as Title II of the Comprehensive Drug Abuse Prevention and Control Act of 1970, which repealed the Marijuana Tax Act. So they repealed the Tax Act, and then they brought in something a whole lot worse. So, the Controlled Substances Act of 1970. Cannabis was established and currently still is a Schedule I drug, according to the CSA. Of course, we know in the news that there's possibility for change on this. So currently there are 5 schedules from controlled substances known as Schedules 1 through 5, and the schedules are updated and republished annually. Schedule 1 classification, the drug has no other substance and has a high potential for abuse. And the drug or other substance has no currently accepted medical use or treatments in the United States. And there's also a lack of accepted safety for use of the drug or substances under medical supervision. So that's Schedule 1, and that's where they've placed cannabis. And I think we all know that's a bunch of bunk. So the Controlled Substances Act, again, the CSA has provided a mechanism for substances to be controlled or moved between schedules or decontrolled. And proceedings to add, delete, or change the schedule of a drug may be initiated by the DEA and the Department of Health and Human Services. And as we all know, this has now been done, and there is potential rescheduling coming in the future. We don't really know when. So the Rohrabacher-Farr Amendment came in next, and this prevented the Department of Justice from interfering with state medical cannabis programs. So this was a big step forward. Starting in the 2010s, federal memos and other amendments began to signal a shift of deprioritizing federal use of funds and efforts to tackle cannabis, starting with this Rohrabacher-Farr Amendment. It originally became law in 2014, and it's renewed each year in federal appropriations. And it prohibits the Department of Justice from using funds to prevent states, including the District of Columbia and the Northern Mariana Islands, the U.S. Virgin Islands, Guam, Puerto Rico, all of our territories, from implementing their own laws authorizing the use, distribution, possession, or cultivation of medical marijuana. Additional memos, then in 2018, we get to the Farm Bill. The Farm Bill is also known as the Agricultural Improvement Act of 2018, and it's authorized the production of hemp and removed hemp and hemp seeds from the Drug Enforcement Administration's schedule of controlled substances. And it also directed the USDA, U.S. Department of Agriculture, to issue regulations and guidance to implement a program to create a consistent regulatory framework around production of hemp throughout the United States. The establishment of hemp as a regulated commodity also paves the way for U.S. hemp farmers to participate in other USDA farm programs. And the Farm Bill defines hemp as the plant Cannabis sativa L and any part of that plant, including the seeds thereof and all derivatives, extracts, cannabinoids, isomers, acids, salts, and salts of isomers, whether growing or not, with a delta-9 THC concentration of not more than 0.3% based on dry weight. Boom. That's right. This was a big act. In 2022, the Medical Marijuana and Cannabidiol Research Expansion Act was signed into law to allow cannabis to be more easily researched for medical purposes. And this is the first standalone cannabis reform bill enacted at the federal level. So there we go, research authorized. Some other federal rules to know, just going to gloss through them very quickly, but some of the federal rules, if you violate any of their positions on controlled substances, technically the government can come in with asset forfeiture. They can come in on RICO predicates, which is the Racketeering, Influence, and Corruption Organization, because it's still a Schedule 1. Cannabis-related businesses, also known as CRBs, could potentially still be charged with racketeering under the RICO Act. Per the Act, it means any act or threat involving murder, kidnapping, gambling, arson, robbery, bribery, extortion, dealing in obscene matter, or importantly right here, dealing in a controlled substance or listed chemical as defined by the Controlled Substances Act. So this is the problem, is that cannabis is still defined under the CSA. There are criminal liabilities for being involved in any of those activities. I'm going to skip forward a little bit here in my notes. I want to cover briefly legalization by the states, because there are a few notable milestones in the timeline of cannabis legalization that have been undertaken by state governments, including Hawaii. Until cannabis is federally legal, the burden will remain on states to create their own regulatory framework and enforcement for the legal cannabis market. So the status of legalization in each state is constantly changing. One of the most important things to do is to continually look up your state's legalization status and get to know the cannabis regulators in your state. Even where legal, the regulations are continuing to evolve, so it's imperative that you stay on top of your state's specific laws around cannabis. In 1973, Oregon was the first state to decriminalize possession of small amounts of cannabis, downgrading it to a fine similar to a traffic offense. In 1996, California, the state where I live now, became the first state to legalize medical cannabis with the approval of Proposition 215. I had just moved to Amsterdam at that time, so I missed that in California. In 2012, Colorado and Washington became the first two states to legalize the recreational use of cannabis following the passage of Amendment 64 and 502. Despite legalization progress, much of today's cannabis banking challenges stem from the fact that cannabis is still federally illegal due to its current status as a Schedule I drug under the Controlled Substances Act. So we are truly hoping that things are going to change substantially as cannabis gets rescheduled. So I just want to cover a couple of terms here, because I may be referring to things that, we all love our acronyms. So CRB is a cannabis-related business. And I also want to call out the differences between cannabis versus hemp as legally defined. The substance cannabidiol, as derived from marijuana, has a delta-9 THC level that is greater than 0.3%. Hemp currently means the plant Cannabis sativa L in any part of that plant, as I mentioned before, including the seeds thereof and all derivatives and extracts and everything that comes from it, as long as the THC concentration is not more than 0.3% on a dry weight basis. Delta-8 THC, also known as Delta-8, is a psychoactive substance found in the Cannabis sativa plant, of which marijuana and hemp are two varieties. Delta-8 THC is one of over 100 cannabinoids produced naturally by the cannabis plant, but it is not found in significant amounts in the cannabis plant. As a result, concentrated amounts of Delta-8 are typically manufactured from hemp-derived CBD. Cannabis operators are plant-touching entities that are licensed by the state to perform certain activities within the cannabis supply chain. From seed to sale, cannabis operators can be vertically integrated or not. Cannabis operators include, and of course this definition changes by state, but cannabis operators include cultivators, farmers and growers, testing labs, the processors, the dispensaries, the retail stores, and delivery services. CRB, cannabis-related business, is any entity that participates in the cannabis industry. This includes cannabis operators and all related businesses with the exception of government. At times, CRBs are also referred to marijuana-related businesses, so MRB, CRB, fairly interchangeable. There are tiers of cannabis-related businesses. So that the tiers basically relate to how closely you are to being plant touching. So I want to cover that for a moment here. So these are not regulatory definitions, and each financial institution may have their own definitions based on their own risk tolerance level, and they may define these tiers as direct versus indirect, which I'll cover in a moment. Tier 1 is direct. There's 3 tiers. Tier 1 is direct, directly plant touching. Tier 2 is indirect with substantial revenue from Tier 1. Tier 3 is indirect with incidental revenue from Tier 1. So what is a Tier 1? A Tier 1 business in this tier literally touches the cannabis plant at some point along the supply chain from seed to sale, and they're generally licensed by a government agency or regulator. Effectively, all of their actual or expected revenue is derived from the cultivation, production, testing, or sale of cannabis. Although marijuana-related businesses are generally considered riskier than hemp-related businesses by many financial institutions, both marijuana and hemp cultivators and processors are plant touching and licensed and are therefore categorized as Tier 1. Also, businesses that have a financial or controlling interest in a Tier 1 CRB generally are considered to be Tier 1B businesses, as in they're seemingly unrelated or highlighted. These things are highlighted by FinCEN in its marijuana banking guidance. FinCEN, by the way, is Financial Crimes Enforcement Network. So to understand the nature of the Tier 1B, it's necessary to examine the nature of the underlying Tier 1 business that they're related to. Tier 2 is indirect, but yet indirect as in not touching the plant, but yet achieves substantial revenue from Tier 1 CRBs. So this tier poses more of a moderate risk to financial institutions and consists of businesses that are specifically focused on the cannabis industry and are typically newer, but not otherwise direct. So when determining what qualifies as Tier 2, there are 2 qualifying tests. One is derived revenue, Tier 1 derived revenue, and the other is hemp-derived product threshold. So, Tier 3, indirect businesses with incidental revenue from Tier 1 cannabis-related businesses. So this poses the lowest perceived level of risk to financial institutions. Tier 3 CRBs are typically larger, older businesses making a foray into the cannabis space and derive only incidental revenue from selling some products and some services to Tier 1 CRBs, or they're selling hemp-derived products. So basically, Tier 3 businesses are like Tier 2. The key difference is in the relative portion of the company's revenue